Gotta be Basil.
It depends. Whatever you like. Are you
See,
British?
Don't fucking judge me, Josh. I can be whoever
I'm
I
not.
want here.
I'm not
dude.
British. I'm not
I can be
British.
whatever.
Well, a lot of people who think it's my real name call me Basil, because they think I'm British or something. But I'm just a plant.
How's your accent, though?
Not very good.
Yeah. All right, guys, you announced SKYCASTLE a couple weeks back, going after sort of the incubator opportunity around app coins, internet capital markets, whatever the word of the day is to describe this, I guess, growing number of teams, founders that see value in launching tokens earlier. Got a lot of early C Club day vibes from what you guys were going after here. I think C Club notably did this token swap model early on, and I think we learned that it was not the right model for us moving forward. One of those reasons was that not everybody was launching tokens in the way that they are launching tokens today. So maybe I'll leave it to you guys to maybe introduce the opportunity that you see here, and then Garrett, you've had a whole bunch of hot takes on tokens that you and I have got into a little bit, so maybe we can get into that as well.
Yeah, for sure. Thanks for having us on. I think Basil and I launched SKYCASTLE about 7 weeks ago now. I mean, I think the idea was we had seen something kind of bubbling up for a long time. Josh, Jess, like you guys have seen this with Seed Club over the last few years, et cetera. And I think like now that we see an opportunity for a lot more teams to launch tokens, accrue revenue to them around real apps and products, et cetera. And we kind of felt that there was a real opportunity to be sort of a incubator advisory group because we had seen so many founders and teams launch tokens too early without enough thought around it and not having a real help and kind of advisors and an incubator to kind of get them done the right way. Still very early, still a lot of teams doing this that, I think are very small projects. We'll see how they grow and kind of mature. But I think there's a really exciting opportunity to tie a token to an app, a product, a network, a community, whatever it may be. App coins being the kind of du jour term, I guess, these days in many ways.
Tim's got to you.
Yeah, I mean, it's that. But I also think like the one thing I think we saw the last 2 years that I would say was really important is that so many teams launched meme coins, right? I think because of regulation and the way that things were, that was the tokens that people launched. And then the ones who tried to build real companies, products, et cetera, around those meme coins were hamstrung because they either fair launched, they didn't own enough of the supply, or they just didn't structure it properly or have the thoughtfulness to be like, this isn't just a 6 months or a year thing. I want to try to build around this, longer term. But yeah, I don't know if I'm sure Basil has more to add there.
I mean, yeah, that's basically it, right? We started it where kind of a syndicate of builders, a bunch of people have built companies and sold them before inside of Sky. And generally we were on this kind of small niche platform, Farcaster, right? And everyone is there developing these apps. A lot of times kind of in their own silos, building into each other. And then on top of that, it's like everyone that's in SKYCASTLE, is here to help. And they were offering a helping hand. And we were just like uncoordinated, and we were like, why don't we just coordinate everything under one token, one umbrella, and then you're going to do it anyway. Now you're going to get paid Sky. So that was kind of the premise.
How did you guys decide on the model? I think the easy pushback on it is there's just no way the best founders are going to want to give you guys 5% of their token supply for advisory. Obviously you guys feel differently, or do you just see a bigger opportunity in kind of like the long tail of founders who are maybe taking a different path to building something?
I mean, we think it's like pretty fair. I mean, what we do predominantly is design the tokens and stuff, and that's what a lot of these founders, I mean, there's a huge opportunity in app coins right now. A lot of these developers are coming here. They're engineers. They like to build stuff. They don't really understand like the economics of it. They don't understand the distribution aspect. They don't understand the capitalization aspect of it. And so they come to us. You basically kind of deploy, issue this token out of thin air, right? Given there's no pre-sale, this token comes out of nowhere. You give us 5% of supply, and then our model, fundamentally, we have to accrue value to that token. We have to build that token up, or we literally go like insolvent buying back our own token due to our model, right? So, that's how it works.
Yeah, I mean, I think that's the idea, is that it's kind of like the SKYCASTLE token is more of an alignment token than an incentive token, right? It's a way to align the incentives around. It's like, if you're buying SKYCASTLE token, you're kind of betting on us to execute against the teams we're incubating and those teams to be successful, right? So I think it does provide a lot of alignment. So I think Josh, to your point, you could argue that 5% is a lot. I think I think we've seen models like this with Seed Club, with things like YC and things in the past. I think a lot of these are still very early, right? Most of these things, haven't raised capital already, et cetera. But what we saw in the past is that if you're launching a token that you would plan to associate with a product, an app, or something like that, you should be holding more of it than you have for a meme coin or other things. And I
mean,
think,
yeah, that was just such a negative, copycat idea that people just did. And yeah, I think that even for really exceptional founders, getting back on side from not having supply because they kind of sold it all on pumped up fun has been a huge challenge. So definitely on board with that. I think maybe to chunk it up a little bit, because I think you're very right. This is the C Club started with this sort of 3% token swap fee. And I think what we saw was that in the early days, that was very appealing. And there was sort of this ideological, there was sort of a ton of talent that emerged because this was new and there was an ideological bent to coming on. And then as the market kind of grew and more capital came into the market, what we saw is that, for people going after really big ideas and who's had a lot of credibility or competency, or that they were just, it was very easy for them to go raise money, and so our model became far less compelling, and that's why we switched to doing more VC style. And so the question that really comes into my mind here that I've been thinking a lot about is, like, does the venture math change because of tokens early liquidity? Because I think while I think I'm would think that for folks that have easy access to capital, they are going to look for capital rather than giving up tokens without getting capital. But then there is this big, well, I guess the question is, how big and juicy is this sort of next wave of people that come that are either, I don't want to go raise VC, I want to try to go do something different. This model is more effective for what I'm doing. And then the question in my mind is, do you need to still have, like, is the math here that one of these things returns the 99 that don't ultimately return? Or do we think that gets skewed out a bit more because of the early liquidity or some of the dynamics that emerge from tokens? Because I think if it's that latter, then I think there's like a big category here where, where there's a ton of opportunity. The question in my mind is just really like, what sort of liquidity do you need to have around here? And that's maybe where so I don't really know where I land on this. I think it's super interesting, and I go back and forth in my brain quite a bit. Does the venture math change?
Yeah, I mean, I think the venture math changes in the sense that it's just more public, right? I think if you raise a pre-seed and a seed, and it's a large seed, we've seen seed with secondaries right on top of them, right? And I think that happens behind closed doors or in an abstracted sort of private deal making. And I think if you're trying to value and accrue to a token, then that just kind of happens out in the open, right? And I think that does increase volatility. That does come with more risks. There is unquestionably differences there. But I would argue it's happening more in the open and in a more public and permissionless way, right? But I think the same thing can happen if the founder and team plans to accrue a lot of the value into the token. But I think different teams are going to want different things. Some are going to want to keep like equity and token separate. Jess, I know like you were talking about that on the feed the other day. But I think some teams may just want to be like, now that there's this world where we can just accrue the value to a token, it's simpler, and you don't need this bifurcated sort of model. And I think that's what Basil and I are certainly excited about, and a lot of the people within SKYCASTLE are excited about.
I think what excites me the most about it is, venture forces like these binary outcomes, right? It's like you either become a multi-billion-dollar company and IPO, or you die trying. And I think there's a lot of founders who get forced to build stuff they don't want to build or grow at rates they don't want to grow because of that. And if you can take this alternative path and go build something that is, has a $50 million value or $100 million value, and you can just be happy and go grow that business, I think I don't know. I believe we're going to get a bunch of more interesting products that maybe couldn't have existed in this VC world that, has just funded B2B SaaS for the last decade because it looks great in spreadsheets. And yeah, you can bring
that's my bull case too, is that there's sort of this, like, there's sort of the long tail ventures, like a few teams at the head that make all the money, and then a long tail of death. And then what happens when you kind of push that out a little bit more to say, well, actually a $10 million outcome or a $15 million market cap here is actually really good, given some of the dynamics that exist in the business. Or, for somebody who's starting something from zero, that can be meaningful money, especially if a lot of these opportunities, we started off the show talking today about just how I would just describe it a lack of creativity from the venture capital world, and in what there's so many consensus bets of everything coming around the same thing, that I think it's very reasonable to think that, somebody who just wants to say, I don't want to have anything to do with that, I'm going to start and build on an opportunity that I see with a token in day one, and actually emerge from that as like a breakout product. think that opportunity is greater today than it ever has been.
How are you guys thinking about the right token models for these teams as you work?
Pair them all, right, Garrett? You got to pair them all with the base token.
I mean, I tweeted yesterday. It seems like there are kind of three schools of thought emerging. There's, the like brand token thing. We're gonna, create kind of an economic alignment through buy and burns. There's a bunch of people running at this kind of equity linked opportunity that, equity on chain, whatever, doesn't feel that new to me. And then you kind of have the, network tokens where I think, quote pairs maybe fall into, or these kind of productive assets that are kind of core to the thing they're building. So I'm curious how you guys maybe approach the token discussions and if there's models within those that are exciting you the most.
Yeah, I mean, to start, there's no two tokens are the same. I think that's like kind of one of the biggest misconceptions. And we see kind of a lot of that too, is people kind of compare us like our clients are like, well, like look how Sky deployed. It's like Sky is a completely different thing with a completely different value prop. You can't like every project, the token should be built around that project. So I mean, the ecosystem thing on the pairing, I think it's yet to be seen. I think it's, virtuals was a good one. We've seen this in the past. We've seen this many years ago. We're seeing it again today. Now it's all the rage is the pairing. And I think there is a value prop in moding out downstream like that to kind of protect some liquidity, but it works both ways. So I think you need to be, if the network token, if the platform token isn't of size, I think it's inherently limiting. But again, right, all projects deserve kind of unique, like you have to really think through these things because it's in the tokens, it's always the second order that always comes around and bites you in the ass.
But there probably needs to be some sort of core thesis on how value comes back. I mean, it feels like what we're doing right now is, and just maybe over the last 10 years, is trying to speed run these economic experiments to answer the question of how do we align token holders with the business value or the economic value that's being created there. And so I think it's probably one of the most important questions. And I'm not certain that there is going to be like 100 of these things. I think there's probably going to be a few. And so I think the core of Josh's question is really like this exploration that we're just fascinated with, which is like, what are the models that ultimately are maybe most correct and then get iterated on rather than thinking there's just one. Yeah, I don't know. It's interesting to me.
Yeah.
I think it's interesting. I mean, I think like obviously we want like, tokens, think about the VC thing, right? I think getting out 10 to 20% of your token kind of early and things to early people who want to believe into is kind of one thing that's important, right? Now, how much you want to control beyond that and how you plan to use and distribute it is really important and thoughtful. And you need to be clear about comms and how you kind of take about it. But I think to your point about the model, one of the things that like I know I'm particularly interested in is like these products who take in a stable coin for a service, a subscription, a product, whatever it may be, and then they're using their project token as an incentive, as a rebate, as something to align them around the project. And that's just really for alignment in the early stages, because I don't think that these early projects to instantly turn around and give back revenue or start that flywheel instantly makes sense, right? You need to have more traction and get going there, and then eventually consider turning that on or making that a piece down the line once you've really found success in kind of product market fit, et cetera. But I'm not a believer that should happen on day one in the vast majority of cases. And I think this 2-token model with a project token and a stable coin where users are paying in a stable coin is really interesting, both because it's easy to build a business around it. It's also it opens up the potential audience to a wider subset of people. When if you're asking someone to spend a floating token, I think it's tricky and really hard usually.
It's extremely hard. Anything if you're selling a service or a good, two token model is usually always the way to go. And that's basically your foundational model, where it's like USDC is your day-to-day operations that provides you with that runway, allows you to like work back into your budget. And then you have kind of a loyalty token, right? It's like airline points, this and that. It's like a perk token that does all these other things. And then that can have, that can have rev split, and you can do all types of things with that as well to build it out to kind of like effectively, flywheel it, effectively distribute value back down the system. But it always starts there.
Bobby at Dupe is doing running this playbook probably to the best that I've seen so far. I think they launched their app last night, and it's climbing the App Store rankings right now. Mm-hmm. And they have this equity business. They make a bunch of money off of their core business, and then this token just becomes this like lubricant for interest and excitement. And funny, he fat fingered that and had to go buy a whole bunch back. So an example of somebody's been able to kind of navigate that around. I think you had a great post yesterday, Garrett, about this sort of quote pair model and like where and how it gets applied. I think is probably like the exploration right now. And I think I agree with your underlying premise that But it comes back in my mind to like, what are you trying to go build here? Like, it feels like Zora is very interesting in the Zora context because there's sort of this uncapped number of markets and assets that could be launched on it. And also people are showing up there because they actually don't want to take on the burden of trying to go build something. Like, there's sort of this like risk, the social context takes that risk off the table. And so, but if you're trying to go do after, you know, an application or a startup, or if you have really big visions for it, I think that maybe becomes a little bit more complicated. But I do think that, you know, in the same way that I sort of asked the question about does the venture math change? I think which at the core is like, is there a new type of organization and asset that emerges that doesn't fit in the sort of binary outcome world? I think yes, and I know the Noise guys are sort of running at this, and I'm very stoked that they are running at it because I think they're well positioned to go do it. But it needs to, for that to be successful, I think there needs to sort of be this new type of thing that emerged. In the same way that maybe there's specific sellers that only sell on Amazon and don't sell anywhere else because there's that unique business opportunity that was created by the platform. That's how I could see that working out. But I think generally agree with your take.
Yeah, I mean, I agree. I think like the biggest reason to launch on a launchpad is for distribution, usually, right? And I'm particularly of the thinking that with outside of a particular vertical, like if you're a creator and you want to do that, then Zora does make sense, right? I think the Zora model makes sense, and I think why it makes sense is because it's vertical specific, right? It's really only for like creators and maybe live streamers now today, and like creators in a broad sense, let's say, right? Like, so I think that makes sense. Virtual is the first one who really did this model. They did it built around like agents, etc. Zora. But I think for the more general purpose, if you really want to build a startup, or if you really want to build a product that's more agnostic to a vertical or doesn't have a launch pad that gets you distribution within that vertical, it's a lot harder value proposition to go launch that token because you're sort of tethering yourself to the inherent platform token, be it Zora, Virtuals, others, like. And I think that can be limiting, or it can be a very tricky thing especially if you're not feeling like you get distribution out of it, which I think for some you do and you don't, but most times the distribution is not big enough to be truly a differentiator most of the time.
Yeah, I mean, this is the stuff that just gets me excited, regardless of where the price action is or whatever. Like this speed running of economic experiments, and just how many nuances can exist in something that maybe at the high level looks pretty simple and direct, but is anything but when you get into it. Okay, well, I mean, you guys are obviously, I'm sure you have some interesting things. I mean, we've talked to a couple teams actually that are working with you guys. So can you give us a little sense of like what the next little while looks like for SKYCASTLE? What should we be expecting from SKYCASTLE adjacent tokens?
Yeah. Garrett, you want to take it or you want me?
Go for it.
So we have about 40 people now in Sky. We're onboarding we have 30 partners, and that expands to 64 council. That expands to like another 4 or 5 advisors. Overall, the network will go to 100. So right now we're doing some like internal scaling on the coordination side, just to ensure that we can take on new users and effectively continue to service these clients. Other than that, the funnel is like 50 deep right now, but the pipe is we have 6 in. We got another proposal out, so it's really just an amount of can we service these effectively. So we're slowing down a little bit on the funnel side. We're not really taking too many folks in. Obviously, as we kind of build out the internal stuff, scale. I mean, the entire design is built for volume, but it will take a while for us to get there.
Yeah, I think like there's 4 or 5 projects right now that we have and we're actively incubating. We'll see the first kind of token launch for those come up in the next probably 6-ish or so weeks, probably one before the end of the year, probably another in January and on there. So I think like that's the exciting thing to look at. You can go follow us on socials and see what those teams are that we've announced, etc. There's one called Likes, there's Den, Cody, Rips, and Quotient are the 5 teams so far that we've announced. I think we're all pretty excited about those, and I think there's some interesting mechanics there at play. But as Basil said, I think we've slowed down kind of taking on new ones at the moment, making sure we can service and get these ones kind of off the ground in a good way. So yeah, and then I think as Basil mentioned as well, like we started SKYCASTLE with a group of myself and Basil founding it, and 30 kind of key people who are really influential, have founders, ex-founders, other influential people across the ecosystem. And we're going to expand that. So it'll become a bigger and bigger network that you'll tap into both for advice, launch, distribution, go to market, etc. And I think ultimately one of the things that I'm a big believer in is that social capital is upstream of financial capital. And I think SKYCASTLE are really embodiment of that.
Yeah, you guys got a good crew there. A lot of friendly faces. Cool. Yeah, I mean, I like this. I think, we were talking this morning about there just being 1,000,001 launch pads that are coming out. I don't think that is like the competitive edges. Are you working with really exceptional teams that are going to be really great tokens? And I think that's the scarce resource that's out there. And so I think coming upstream and building the context and support, I think we talked to some of the teams that you mentioned here, and that's what they're excited about to have from you guys is just the sense of a thought partner and the depth of that thought partner to be able to help do a thing that is, I mean, you're a founder, you're trying to go build something. This is a big, risky, uncertain thing. Ultimately, it feels, especially if you haven't been just heads deep in the crazy shit over the last 5 years. Like, if it can be a very hard thing to get caught up on, and so doing that alongside people who've had skin in the game, learned the hard lessons already, is just I think a big benefit. So excited to see 6 weeks. Cool. 6 weeks away. We didn't even get into the model a little bit, which I think is also interesting. This sort of nav-backed token incubator. I thought the way you framed it up was really good. So, all right, I think we should probably hold.
We got our threader. We got to jump.
We have more. All right, we got to leave it there, guys. What is the Twitter account the best place just to stay up to date? I think people will probably want to make sure they have a sense of being early to whatever you guys launch.
Yeah, it's at SKYCASTLE Tokens on Twitter, SKYCASTLE on Farcaster. Follow us there. A lot more to kind of dig into. But yeah, thanks for having us, guys, and we're happy to come on in the future once there's a bit more to chew on.
Yeah, I would say, like, I've enjoyed the back and forth on the various social apps that we've been using. So I think just finding thought partners for like pushing at the edges, and I think earnest in that. Like, I feel walking a similar path with you guys. So this idea of really trying to get to what is right, I think is, I guess I appreciate the discussions we've been having. So make sure you give Garrett and Basil a follow on X, because you'll probably see more of like the live thinking emerging there. All right, guys, thanks so much. Best of luck, and let's get you back on when we have something going live.
Cool. Thanks, guys.
Cheers.
Peace.